Good evening, ladies and gentlemen. Thank you to Shares Magazine and AJ Bell. I never know whether it's a good thing to be the last person at these things, but we're on the home stretch, so please bear with me. I'm the head of investor relations at Anexo, and I'm actually a relatively new joiner to the company. And one of the things which occurred to me fairly early on is that people don't really know very much about Anexo, and part of my role is to change that. This is only the second investor event that we've done as a PLC, but we're going to do a number more of those. So what is Anexo? Anexo is an integrated credit hire and legal services company which specialises in providing replacement vehicles to people who have been victims of a road accident which was not their fault. Furthermore, what we do is we concentrate on what we call the impecunious customer, and I'll come to a definition of impecunious later, but ultimately it's people who haven't got any money and they don't have the ability to go and organise their own replacement vehicle. This gives us the opportunity to supply vehicles to them at credit hire rates, and we then claim both the cost of the vehicle repair and the credit hire rate from the insurance company of the at-fault motorist. It's extremely straightforward. So ultimately we have a network of people who take care of the repair side of things, and then we pass the cases on to our legal services to recover the hire charges, as we say there. 2018, we listed about a year ago, actually. 2018, we had turnover of 56.5 million, profit before tax of 16.1 million, and we have a 30% operating margin. So it's an extremely healthy business. We have what we call the direct capture business model. And before I just do the overview, I just want to be absolutely clear as to the difference between what we do and what I think the experience most of us have with insurance companies. Now, I'm sure most of us in this room have at some stage had a prang. I certainly have. Somebody's driven into the back of me at traffic lights on a number of occasions. The biggest shock to me when I started coming across Anexo was you don't have to go to your insurance company. There is no need to. Now, under the standard insurance process, something happens, somebody runs into the back of you, you call your insurance company, and the insurance company says, okay, we will put a claim into place. They insist that you have your vehicle repaired at their own selected garage. They will provide you possibly with a replacement vehicle, but it may not be a like-for-like vehicle comparable to the one that you were originally driving, and the period for which they provide it may vary. Quite often it's not for a very long time. It is quite often the case also that whether or not you have a no-claims bonus protection, you will find that your premium goes up as a consequence of an accident which is not your fault. There's a statistic which suggests that the average premium for somebody who's been involved in a no-fault accident goes up by £105 a year. Ultimately, the car is returned to you and replaced, but you have to give your hire car back quite often before the repair is ready, so you're stuck without a car. The anecdote I always use about being provided with a like-for-like vehicle is that when my children, I've got 4 children, we had a people carrier and we were banged into at the traffic lights, and we were given a Renault Clio to fit 4 children and 2 adults in. So that's not desperately helpful to the insurance company. The Anexo way of doing things is rather different. Basically, the motorist takes the car to the garage of their choice. We have a network of 1,150 affiliated garages across the UK. My chairman is from Preston. He calls them Fred in a shed. And they are the people, I think we've all got one probably. They're a garage which does normal, straightforward repairs, and they are affiliated with us. Therefore, the not-at-fault motorist will take the vehicle there. The garage will tell him how much it will cost to fix. He will put us in touch. He will put the motorist in touch with us, and we will provide a like-for-like vehicle for the period of the repair or until the vehicle is written off if necessary. This is a like-for-like vehicle in the sense that if you're driving a Mercedes, you will get a Mercedes. If you're driving a moped, a lot of our business is motorcycles, you will get a moped. If you're driving a power bike, then you will get a power bike. We have a number of transit vans, not very many, it's mostly vehicles and motorbikes. And under those circumstances, we will then contact the at-fault insurers, and as I said before, we will claim from them the cost of the repair and the cost of the hire for the period during which you have the car, which will be right up until the time that your vehicle is either returned or written off. So just to go back, we run this through 2 separate businesses. We have Edge, which is formerly known as Direct Accident Management, which effectively looks after the repair side of things for both cars and motorbikes. We have a fleet of vehicles. We've got about 2,000 vehicles on the road at the moment, of which 700 are cars. about 1,300 motorbikes. 1,100 of those are 125 cc's. The others are power bikes. And our typical customer is quite often somebody who may be involved in delivery. He's your pizza guy. He's the guy who's delivering mail, whatever it happens to be. These are people who need to get their vehicles back on the road as quickly as possible. In terms of Bond Turner, which is our legal practice, they take over the process at that point and they look at the recovery of the hire charges and the repair from the at-fault insurer. Now, the one thing which I want to stress is that we're not ambulance chasers. That's the first thing which most people think of when they think of us. We're not ambulance chasers because there aren't any ambulances concerned. We don't really do PI. It may be part of the claim, but we had £56.5 million worth of turnover last year, of which about £500,000 was PI related. In other words, whiplash or soft tissue injury. The rest of it was not. And secondly, we don't have to do any chasing because we don't need to chase people. People are coming direct to us through the garages which they contact to do the repairs on their cars. And just to give you an idea of the size of the business, potentially, there are about 37.5 million vehicles on the road. Total road traffic accidents in 2018 were 700,000. Just to give you an idea, at the bottom, last year we had 12,200 applications for us to take on their cases. We took on 6,000 of those. In other words, we were able to take on 6,000, which we believed to be the lowest risk case to take on. We were able to knock back 6,200 where we felt there was not perhaps a reasonable prospect of a happy outcome. Perhaps the person involved was not impecunious, perhaps there was an element of at fault. It was something which could raise questions in the future and make it more difficult to resolve the case. So it's a very straightforward differentiation from what most of these organisations do. We're doing direct capture of customers from garages, and we are looking at the impecunious market. I just want to be absolutely clear what impecunious means. If you have no ability to walk into, for instance, Hertz or Avis, whoever it may be, and say, my car has been damaged, I need to hire a new one. These people do not have access to cash. And typically speaking, they're the people who are very vulnerable when it comes to having to claim for an insurance company, because all they're interested in is having the bare minimum of insurance cover to make them road legal. So if you're one of these people and you're filling in your insurance form, it will say, do you need income protection? No. Do you need credit protection? No. Do you need a replacement vehicle? No. What is your excess? What is the largest excess I can possibly get in order to get myself insured? £1,500. Okay, for £20 a month, you are now road legal. But if you have an accident, you have nowhere to go. That's why they come to us. One thing I would say is that sorry, you'll have to excuse me. There's been a lot of change in the market. A lot of the PI solicitors, and I'm sure you're aware, have been withdrawing from the market because of what's happening with the Potential Civil Liability Act, which comes into force later on this year. And we are the only big player in this particular game. There are one or two high street solicitors who are attempting to join in to this particular sector, but they do not have the reach that we have. The barriers to entry are really quite high. You have to set up a network of garages, which we've managed to do, and you have to have a network of cars, which we've managed to accumulate. The average competitor that we have has a very small number of vehicles, and they're not necessarily like for likes either. Our car fleet is very straightforward. They're either Vauxhall or Mercedes. If you were driving a Mercedes, you would get a replacement Mercedes. Now, we floated last year and raised 25 million from the market, and we did two things with that. Firstly, we increased the number of vehicles we had very considerably. We had just over 1,000 before, and as I said earlier, we're just under 2,000 at the moment. And secondly, we wanted to increase the number of litigators we had working for us. We are based in Liverpool, and we had an existing staff in Liverpool. We opened an office in December in Bolton with a recruitment of 20 experienced litigators. Now, as at the end of the year, we had 89 senior fee earners. We're now up to about 115, and that is growing on a regular basis. That means that we were able to take on new cases. Every new lawyer we employ enables us to take on new cases. At the moment, we have outstanding about 20,000 case files. Okay? Now, last year we resolved 3,700 cases. So you can see there's a considerable backlog to work through. And I just want to talk you through the timing of this. When a case comes into us, the first thing we do is to contact the other person's insurance company and say there has been an accident and therefore we're going to be making a claim. They then ignore us. That's what insurance companies do. We then write back to them and say, we are going to pursue this claim against you and we'll be looking to take you to court unless you are willing to contact us back. They ignore us. We then apply for a court date. This is the lengthy part of the process. There are a limited number of courts in the country, and they're under relatively severe pressure in terms of cases. And it can take up to 15 months to get a court date. But at that point, when we finally have a court date, we write back to the insurance company and say, by the way, this claim is still live, and we'll see you in court next Thursday, at which point they tend to ring up and ask for a settlement. And this is an absolute statistic, 99.5% of the cases we take on are settled before court action. We have a very, very few cases which go to court action. Of those, we win about 98.5%. So there is a very, very small number of cases that we don't succeed in. And the only reason that is, it tends to be because we may be acting for instance, a driver who's Brazilian. He's gone back to Rio and we can't get hold of him. So by and large, it's a very, very successful business under those particular circumstances. As I said, we've brought the vehicle fleet up there. We have roughly a utilisation rate of between 75 and 80%. Obviously, some of our cars are off the road at any given time. Our motorcycles have a reasonably high turnover because they tend to get bashed about a little bit, and occasionally they get pinched. We usually get them back because they have trackers in them, but that's a problem within itself. We're Yamaha's biggest bike customer in Europe at the moment. We spent £4 million on bikes with them last year, which they were rather pleased about. This is really a look at the competition. There are a number of people who are involved in this, and I think probably a lot of people would be looking at Red Air, formerly known as Help Hire. The only thing I would say, and I'm not in the business of criticising our competition, the only thing I would say is that they are a supplier. They are a go-between for the insurance companies, and my experience is that when you're a supplier, you're going to get squeezed in terms of margins. And if their margins are around about 12% and under pressure, our margins are around about 30% and considerably more robust, because we have the direct contact with the end customer. So just to give you an idea of some of the operational highlights, that's relatively straightforward in terms of the fundraise. 56.5% was our revenue growth, and operating profit reported at 15.4. A couple of things I would mention. We do pay a dividend. We paid a dividend of 1.5 pence per share. The chairman and his wife, who is also, his wife is managing director of Bond Turner, our solicitors practice, between them own roughly 70% of our shares. So I wouldn't be at all surprised if they carried on paying themselves a dividend. And we have a funding agreement with Secure Trust, which we've been reviewing at the moment, and we will be making some announcements on that in the future. But ultimately, we have a credit line which we're able to draw on. One of the KPIs we're looking at is to make sure that we are actually net cash generative by the end of this year. So the need to use our credit line will be reduced accordingly. So just some interesting KPIs in this. Some of these, we're a very stats-driven business. It's one of the reasons why I find it quite attractive. It's like cricket. We want to know exactly where we are in terms of the numbers. But cases settled, we settled 3,710 cases last year. That's roughly 310 a month. What we're looking for at the moment is a run rate of around about 575 per month by the year end. This will give us an annual run rate of 7,000 cases being sold. Now, don't forget, there are 20,000 outstanding cases, and we're taking cases on all the time. So you can see that actually the pipeline is extremely robust. Legal staff and senior fee earners at the period, as I said earlier, we employed 89 people at the tail end of last year. We're up to 110. The Bolton office has been a great success. We have our main office in Liverpool. It's been extremely difficult getting people to commute from Manchester to Liverpool. I don't know if anybody's ever tried it, but it's extremely hard. And people don't last very long. They tend to come back. So it seemed the most obvious thing to open the office there. And as I say, it's been a very straightforward business to equate the number of staff we take on with the number of cases that we're being able to solve. When people are fully up and running, and it takes about 9 months to get a new hire up and running in terms of taking on existing cases, taking responsibility for new cases, and so on. When they're up and running, they should really be expected to solve. We have easy cases and hard cases to be able to resolve roughly 15 or 16 easy cases per month and roughly 8 or 9 more difficult cases per month. So that number, that target figure of cases resolved is going to go up exponentially as the new hires we took on from December onwards start getting fully bedded in. And I think that's going to continue right the way through the first half of 2020. The other thing which I wanted to talk to you about was actually the numbers that we look at. The average claim that we make against insurance companies is about £10,000. And given the fact that 99% of what of the cases we take on are settled before court action, then obviously there is a compromise involved in settlement. And when we first listed, we had an average of 53.9% of the figure which we were claiming was the figure that we settled for ultimately. That, at the tail end of last year, was up to about 56.5%, and that's going north all the time. And the reason why I mention that is because every single percentage point increase in the margin of settlement is another £500,000 on the bottom line. How do we manage to do that? We just are more abrasive with the insurance companies. We are slightly more aggressive with them. We make it absolutely plain that we are prepared to go to court action. I should stress with this that there was an investigation by the CMA into this particular part of the industry a couple of years ago, and they reached the conclusion that we were providing a useful service, that it was appropriate that somebody who didn't otherwise have access to funds to rent a car should be expected to be able to have access to a vehicle similar to the one they were driving when they were involved in an accident which was not their fault. The other thing to bear in mind is that there is no statute governing this particular business. All of our legal cases are based upon legal precedent, the main one being a Court of Appeal decision in 2003 in a case called Lagdon versus O'Connor, which once again suggested that somebody should be able to expect that they should be able to have a vehicle similar to the one they were originally driving when they were involved in an accident. So a lot of people ask me the question, is something going to happen in terms of regulation to take the wind out of your sails? If we were doing a risk profile, then we would make a statement which says we are not aware of anything in the future which would jeopardize this. There isn't a regulator that looks after this business. Neither, in our view, is there any appetite in any political party of whatever hue to bring in any sort of legislation which would make poor people poorer. And I think that's worth bearing in mind. In terms of the income statement, all of this presentation, incidentally, I have in hard copy, at least I think I do, because they were delivered earlier on today, and they're outside, and it's also up on our website. The income statement and the balance sheet, I'll just skip through. But I just wanted to make sure you're aware of who the board are, since I'm not a board member. Alan Sellers has got 30 years' experience on the Northern Circuit. He set up the business roughly 20 years ago from his kitchen table, and he continues to run it as our executive chairman, and he oversees both the car hire and the litigation process. Mark Brignall, our CFO, has been with the business for some time, and Samantha Moss, who is married to Alan, looks after Bond Turner. We have a series of senior independent non-execs who are both accountants and barristers and so on. Now, one thing which I would mention is that we listed in June last year with a valuation of £100 million. We have 110 million shares in issue. The stock price is currently about £1.85. We had our AGM last week, and we released a statement saying that our numbers were ahead of market expectations, and the share price probably went up 10%, which was very gratifying. And our brokers, who are Arden Partners, have raised their target by roughly 10%. They have a target price of £3 on the stock as against its current £1.85, and they're looking for turnover of around about 75 million. That's against our 56.5 for last year. In terms of news flow, we obviously have our half year end coming up at the end of this month. We're expecting to release our interims in the second week of September, at which point we'll be embarking on a series of roadshows. We want to come and see you guys again. We'll also be looking to do some regional roadshows in Manchester and Edinburgh. Part of my job really is to raise awareness of the company with the retail investor. Just to be clear about our shareholding structure, as I said, Alan and Sam, between them, own 70% of the company. Valentina Slater, who's head of sales at the accident management side, owns another 7%. Legal and General and AXA have about 4 or 5% each. They obviously want to keep an eye on what it is that we're exactly up to. And we have the usual subjects in terms of institutional shareholders. We have a small shareholder base in terms of private investors. I would like that to go up, and this is part of my role to heighten the experience that people have of the company. And I find it interesting because it's something, as I said, which touches us all, because we've all been in this situation ourselves. Sorry. Oh, hang on, I'm doing somebody else's presentation. That's kind of clever. What have I done here? That's a cunning plan. It is in some ways a supremely straightforward business. And as I say, the number of road accidents which are reported in the UK prove to us that there is a very, very large capacity for further expansion of the business. At the moment, we're about 2% of the potential claims out there. And because we have a team of people who look at the validity of each of these claims, they look at bank statements in terms of people's impecuniosity, if that's a word. If it isn't, it is now. And they make decisions as to whether or not something is worth taking on. So we are in a very fortunate position of actually being able to turn away more business than we're currently taking on, and that trend looks set to continue. I'm not going to take up any more time now. I'm hoping that we will have a number of questions because historically I've had that. So as I say, I am the monkey and not the organ grinder. So if I can't answer your question, I will hold my hand up and admit it and make sure that somebody rather more senior than me comes back to you.
Thank you very much. Yeah, thank you. Very interesting. Do you have any questions then for Nick? Okay, gentleman at the back first, and then lady at the front.
How do you verify that a motorist who comes to you is the innocent party?
Well, I mean, that's one of the things which we look at. We look at police reports, we look at accident reports where appropriate. We get in touch with the other person. You know, there are a number of things. If we feel that there is a danger that they are at fault, then we won't take the case on. I mean, I'm not going to go through every single procedure that we do, but it is one of the two major things that we look at. Number one, are they at fault? And number two, are they impecunious? Which we do by looking at bank statements and other proof of income. I mean, it's quite interesting, actually. A couple of examples. We had somebody who was a British Airways pilot who was earning his, I don't know, £120,000 a year salary as a British Airways pilot. So in theory, he would not have qualified as being able to take advantage of what we do. And then we looked further into it, and he was divorced and had 6 children and you know, huge amounts of alimony and things like that. And actually, he had no money at all. So he was an ideal customer from our point of view. Alternatively, we had another one who was a mechanic who had, you know, a battered old van full of his tools and so on. He didn't look like he had 2 pennies to rub together. But actually, he was living with his parents and had £8,000 under the mattress. So from our perspective, although he looked like it, he was not the kind of customer that we could take on. So we have to be careful about this. This is the way in which we try and, I mean, we try and make sure that our record of making sure that people are willing to settle because they know that they're going to be found liable in court.
A question here, please.
Who are your customer?
Who are my customers? Yeah. They're anybody who is involved in an accident who is, as I say, by our definition, impecunious, and who is aware of the service that we offer. Now, this is where, under normal circumstances, if somebody bangs into my car, then in theory I take it. My insurance company will tell me to take it to the car dealer where I bought the car. We're not interested in that. We're interested in the people who go to their friendly garage who might be on the corner of the road. And these are the people who keep putting together cars that are 5, 10, 15 years old and do a bit of welding and do a bit of spot work and do some mechanics and will fix these things at a reasonable price. We have a team of salespeople who go around the garages of the UK saying, would you like to be involved in this, and would you like to act as somebody who would recommend us as somebody who can help these people not only get their repair paid for, but also to get a replacement vehicle. Okay? And the incentive for the garage themselves is they know they're going to get the repair bill paid in full and on time, which they're not always going to do by somebody who's trying to finance it themselves, and they're certainly not always going to be able to do if they get involved with an insurance company. So it is a function of using individual, usually independent garages. As I say, we have salespeople who travel the country doing this. We could do with some more of those, I think, and this is one of the things that we're looking at expanding, because we have one guy who does the whole of Wales. That's not sustainable. But it's also interesting because we have a breakdown. I get a breakdown every month of where all the accident claims come from. And it's quite interesting. I mean, obviously there's an element of chance in this because, you know, not everybody has accidents exactly at the same time, but we're particularly strong, funnily enough, in London postcodes, but also Romford, Ilford, Harrow come up with sort of depressing regularity, Birmingham, Liverpool, and everybody looks at their own postcode because that's interesting. I'm TN, which is southeast, and we only did 1 repair in the last month in TN, which either proves they're phenomenally good drivers, which I don't think there are, but also proves that probably we don't have enough garages down there, and that's something we need to look at.
Can you explain for me, and this is, you have covered it, and it's my lack of understanding. It's about the impecunious nature of those underlying claimants. I might want to have minimal insurance cover to save money and not tick any of the boxes. Why, as someone who's maybe not impecunious, why would I not have access to this service? Or why would you not want or be able to take my business?
Because you're not impecunious.
But why?
I don't care. In all fairness, it doesn't matter what you pay for your insurance. What matters is, are you in a position where if we took on your case and we eventually ended up in court, then the judgment would be you would have been able to go to a hire company and finance your own replacement vehicle through your own resources. And I think perhaps, yes, I didn't make that clear, and that's perhaps, I apologise for that. So that's ultimately what it is. Would anybody be able to go to a hire company and say, I need a car for 2 weeks while mine gets fixed? And they say, yes, okay, that'll be X, Y, Z.
Okay, fine.
Yes.
Those cases are not winnable in the same way.
Yeah, they would not necessarily be winnable in the same way. And so that is a risk judgment from our perspective. And there is no point, to be honest, for us taking on your case if we think that there is a better than average chance that it may be difficult to resolve. We're not anxious to go to court because it takes a considerable amount of time. And if we can pick up cases where experience, 20 years worth of experience has shown us that the other side's insurance company will settle rather than go to court because they know it'll be more expensive for them. That's what we look for.
Okay. Gentleman here, please.
Yeah, just a question about, isn't technology going to disrupt your future market as cars become connected when 5G goes around the country? And, you know, cars are getting cleverer all the time and going to reduce accidents. So I'd be very interested in knowing what's happening to that trend of accidents per year.
I think that's fair enough. The thing to bear in mind is that those cars that are getting cleverer are not cars that are driven by our typical customer. And that's not me trying to be a smart Alec, but
they will do in due course.
Well, I think it may do in
Cars got electric windows now, haven't they? They didn't have 20 years ago.
That's very fair. That may do in the very longer term. We don't regard that as being a risk because once again we're dealing with people who will do anything that they can to keep their existing vehicle on the road. They just need to keep it going for the purposes for which they need it, which tends to be their livelihood. I take your point. We don't see it as being an immediate threat.
Thanks.
And a question, Chris, over here. Thank you, yeah.
So,
many accidents involve personal injury.
yes.
So, especially as you replace two-wheeled vehicles, have you got solicitors on your team? Do you dabble in a bit of insurance yourselves?
Of PI, do you mean?
Yes.
So yeah, no, we do. I mean, we'll do PI. It's not the be all and end all of what we do. If there is a PI case involved, then obviously we will take it on. We're a litigation company. We're a firm of lawyers. Therefore, we will take on any litigation that we believe we have a reasonable chance of winning. We are not seeking to take on cases purely for the purpose of personal injury claims. We're looking to take on cases because there is a damage to and repair of the vehicle concerned as the primary function. But yes, we will always look at that. But as I said, in the past, it's been a very small proportion of our business. And the market for PI claims is going to be changed very, very strongly by the Civil Liability Act, which puts a cap on what you can get for whiplash injuries. If there are other injuries, if there are hard body injuries, then that's a completely different thing, obviously, because that becomes a completely different route in terms of the injury claims process. But if we're looking for purely whiplash, then yes, it's something that we do, but it's not something that we seek to do as our primary purpose.
Okay, gentleman here, please.
That was a really interesting presentation, an interesting definition of impecunious. My question is, how do you make your money? I think you were saying that you make about 30% something fees or profits compared to your competitors. You're claiming that against the insurance company. In the long term, won't all drivers become impecunious because of the costs of motoring becoming so high?
One of those is an existential question. One of those is perhaps a financial question. How we make our money? We make our money because we hire out our vehicles at credit hire rates. So in other words, we're hiring out at more than the spot rate to people who are not able to access spot rates from car hire companies. Now we have these vehicles either owned outright or we have them on lease. So let's say for the sake of argument we have a Mercedes which will maybe cost us £600 or £700 on a monthly lease basis. We'll charge that out at £400 or £500 a day. Okay, and that's being charged out for, let's say this person's car's off the road for 2 weeks, so he's got it for 2 weeks. We then take it back. It'll take a day to clean it and valley it and so on and get it back up to scratch, and then we can rent it out again. That's effectively how we're making our money.
Gentleman here, please.
So,
Nick, you said you had 20,000 outstanding cases, and each case was worth about £10,000, the typical claim. How much of each of those 10,000 have you actually taken to the P&L already, and what's the potential uplift once you do actually then win the case?
There's a number of imponderables with that, which is, number one is the amount of time that's, so last year we took 3,710 cases, and at the moment we're on track to do considerably more than that. At the moment this year we're bang on target to do, let's say, 4,000 plus, but there will be, the hockey stick is going to grow considerably because the number of lawyers we hired at the beginning of this year are going to be coming on stream in Q3 and Q4. Now, in terms of what's going through to the bottom line, I think we'll have to take that offline and discuss it like that, but it also depends. As I say, our average settlement rate is 56.3%. So in other words, for every £10,000 we claim, we're getting £5,600 back. Now, when a claim first goes in, we book 47% of the claim. So in other words, 4,700. When the claim is first lodged with the insurance company, we will book that into our accounts. And that's 47% is not a figure we've just plucked out of the air. It's a figure which 20 years worth of experience has shown us we are likely to be most comfortable with. When the case finally comes to settlement and we receive our presumably 5,600, that effectively means we've got another £900. And at that point, that's where we book it in to the bottom line. Does that answer your question? Yeah.
So there's a hidden asset there of 20,000 cases times 900 or whatever.
There is a hidden asset of 20,000 cases at 900, but in terms of the time scale for fixing those, that's the imponderable, because partly it depends on a number of things. Partly it depends on the time it takes to get a court date. Partly it depends on the number of people we have who are able to assume responsibility for all those cases, and partly it depends on the ability of the other side's insurance company to deal with it in a reasonably efficient manner. As I say, I'm relatively new to Anexo. One thing that I have learned is that the insurance industry is incredibly inefficient, and I'm just astounded by the fact that it is still so phenomenally paper-driven. And it means that although it's a lengthy process, it's also a process of enormous opportunity for us.
Lovely. On that note, Nick, are you staying with some drinks?
Yeah. Yes.
Okay, well, if you have more questions for Nick, please grab them afterwards. Thank you very much indeed. Thank you.